All right, what's going on, guys? We're doing a Wyckoff workshop here. We're going to be going over everything in terms of smaller time frames on the indexes. Opportunity here for the future. As of right now, I don't really see any clear signal, and we also have March OPEX here on Friday, so everything's very subjective until we get past that OPEX date. And obviously, as we get more into end of month, meaning closer to April, and we start seeing everything going on within April. One thing that I will tell you guys right now is that the entirety of this cell has a decent range already built behind it in terms of a change of character here. It's not necessarily a change of character in terms of trend, but it's a change of character in terms of speed and velocity, as into which, side is really dominant. From the recorrection lower, we obviously had banks selling off. We obviously had tech selling off, and we had a very risk-off market approach here, with consumers being on a very large run throughout most of this time, throughout the end of February, and then as soon as we got into like that March window is whenever a lot of these buyer footprints started to really kick in here. Within a downtrend, obviously you would like to see some sort of like capitulation bar. And then obviously that capitulation bar, it's followed by like a couple inside bars that are on relatively low volume, a weaker amount of volume throughout most of the trading day. And that would go to show you that the short side continuation's likely going to happen. But within this whole entire sell-off, we had one panic day here towards the lows, and then as you guys can see, price could obviously fail to displace beneath those lows. So that's what, as soon as I saw that, I was like, all right, the reversion trade back to the upside, given the context of everything going on in terms of like, okay, we obviously have gap fills to the upside where price never actually pulled into. From the bottom end of the chart, we're getting a lot of volume and then absolutely no displacement from sellers, no speed, no breakdowns, no nothing. We obviously had nothing going on here from sellers. And then obviously we had pops. Those pops were followed by lower volume drops to the downside, and then further pops to the upside, a sweep of the gap, finally lower volume sells. So everything was like buying dips here, buying higher lows, seeing if this thing continue a little bit higher above the previous high into the gap. And then obviously as we climb our way lower, looking at the imbalances from the buy side or at this gap. If you guys go over to the S&P, you guys can see how right around here, this was also the area as to where we had discount. If you're pulling swing high, swing low, that's right off of equilibrium, and that's where we had the afternoon base as well yesterday. So everything was obviously all predetermined into the FOMC event. This all looked like it was really nicely going to revert here back to the upside from the sell-off period that happened from March 17th into March 18th here in preparation for that FOMC, right? So all of this was really, really nice. It all played out really nicely. If you guys go into the daily chart, you guys are able to see how, as of right now, we're basically in a time where the consolidation is going to displace higher and successfully break out. We also just had this very large Bitcoin whale being liquidated from the 400 and something $1 million short that he opened. This was around the liquidation level, right around here throughout FOMC, and that happened successfully. And now Bitcoin's really on the move, so I could see QQQ kind of moving up towards what looks to be more unfilled gaps to the upside. So the reversion trade was undoubtedly, with no doubt in my mind, the better trade. I mean, because there's gaps to the upside from the bottom end of the chart. We obviously never got any volatility beneath the March 10th panic day, which is the biggest volume candle of all of these candles. And we still have a ton of gaps to fill to the upside. And VIX remains relatively controlled, right? We didn't have any sort of crazy event where like the panic was crazy high, and it all seems like everything was going to simmer down off of this resistance here on VIX. So obviously there was a big failure to break above that resistance, right? It kind of just took the high off of this previous high, and then it never found any sort of retest for like a higher low on the VIX, and there was never really any clear sign of that happening. So all of this looks fantastic. If we guys go over into SQQQ, which is the ultra short of the Nasdaq. This is the inverse ETF of the Nasdaq. You guys can see how this one's actually flagging a little bit, and it remains a little bit better in terms of structure in comparison to some of these other market gauges and true things that drive sentiment, right? SQQQ right now on the daily chart, it's actually flagging after a big time wedge pop, as you guys can see, from lower high to lower high to lower high. And obviously now we just have that wedge pop and now the EMA crossback that everyone talks about. And this looks like some sort of like high tight flag on the daily. So my bias has not really been too far to the upside, too far in terms of like lopsided for the long side trade, and it hasn't been too lopsided in terms of the short side trade. As of right now, it's all range trading, right? And the reasoning as to why is because we have a ton of seller dominant candles in here, right? And then obviously we have a lot of reversion targets here back to the upside. This is why this market's very tricky right now. And we don't need to fill all of them to find an LPSY, right? If you guys know anything about an LPSY, you would understand that it would likely retest some area that makes sense in terms of either a gap or a previous support turning a resistance, or just an area where there's just a big excess of sellers, right? And this whole entire portion of the leg lower from about here down into here, you could find any area of that being some sort of LPSY, right? So if we climb higher, right, and then we start climbing higher, let's just say into earnings, which is around April, and this is a relatively weak bid to the upside, I would say distribution is going to continue into the June window, which would bring an LPSY somewhere within this general range from the low down here, well, technically above these highs, into this retest all the way over here, right? And it could extend just a little bit higher if you guys take a look at like the back test of like this 511.46 spot. But this is just my general area of focus. If you guys want to pull fibs from current high to current swing low, that would be right around your discount, right around here, right? Which is also a gap fill right around 502. Those would be my upside targets here. If we were to obviously move our ways higher, and then the market obviously priced in the fact that they wanted to mark things down into the next earnings report. Do I know if that's going to happen? No, but this is all just really truly subjective into what's coming in terms of like what's price going to do into earnings, what's price look like into earnings, and then we can kind of conclude on what's going to happen after earnings. Now we go over into a lot of the equity market here. We can take a look at NVIDIA and just say, okay, this is pretty much going to be the short side trade for the whole entire quarter, for the whole entire first half of 2025, right? We obviously know that this has been more of the dominant distribution in the general market, right? We obviously had Tesla being one as well, but Tesla was just a very high velocity sell that never had a true entry point that was like super worth taking. On the other hand, we have NVIDIA where, you know, this is still a distributive chart no matter which way you really look at it. There's still gaps to the downside. There's still, you know, you're still range trading within that whole entire leg on where the LPSY actually started from. The LPSY started from the gap fill and from the February OPEX here on Friday, February 21st, which was a gap fill into 3 days beforehand. This is also right off of the June highs, right? So with all of that being said, this thing could obviously redistribute off of structure within structure, just as we talk about with, you know, the LPSY on smaller time frames in terms of like the earnings gap up. That earnings gap up failed to hold the 130 to 128 floor, and then we obviously break beneath the current weekly lows. And once we break beneath those current weekly lows, it's just a pure capitulation, followed by shorting those lower highs and essentially winning every single time. And that's going to happen, I think, once again here, just because the whole entire leg here established from the bottom to where we're actually popping towards is just not strong. Nothing about this is really truly strong. We have a very, very large volume footprint, and we've never displaced in any sort of way that really matches the amount of effort put behind a candle that looks like this. I mean, this is the heaviest volume on a daily perspective with NVIDIA that we've seen ever since all the way over here. On this earnings report here in May of 2024, right? So it's been a very long time. The only thing I don't really like about this chart is that all of the gaps remain filled to the downside here. There's not any true gap that's like, something you can identify as like there's so much liquidity built behind that gap and so many leftover orders. No, not necessarily, right? That was more of the picture that we had in the overall markets here on August 5th, right? In the current context of everything going on, there's not a lot of targets here for the downside other than recent legs back to the upside that we've had from swing low to obviously the current weekly swing high that look just a little bit weaker. They look a little bit weaker in terms of the upside reversion. You guys go over into like some of these other names like Microsoft. I mean, this name looks fantastic if you're looking at it from a perspective of like weekly sweeps here at lower extremes. And this is obviously where like my long side ideas are going to be a little bit more uh, organized towards. We obviously have Google here as well, looking like a weekly hammer back towards this progress gap here from the earnings report of like a 10% markup, and then they undercut that. They put in like a inverse head and shoulders that rallied it way higher. And now we're basically getting those buyer footprints with remaining unfilled gaps to the upside as well. So with overall market sentiment and with where price is pulling towards, I'm going to be looking at these names to revert back to their gaps still. Obviously within, your downtrends, within your uptrends, within any sort of trend, if you're deviating away from gaps to the point where price is a little bit too extended, and then it's failing to break beneath like current lows and previous supports, then they have to revert back to the upside to capture the entirety of those orders remaining within that gap, find a lower high if they want to continue their way down. I mean, that's the whole entire way the market operates. It's how it's operated for the whole entire time that the market's ever been a thing, is just simple supply and demand. Whenever supply runs dry, in terms of orders, obviously willing to sell at such cheap prices on Google, like at 158. There's going to be a lack of demand, and it's going to have to relocate, obviously, or I'm sorry, a lack of supply, and it's going to have to relocate that supply within areas of the chart where not all supply was filled from. That's why these gaps are always respected. So there's still going to be obviously reversion here back to the upside and into a ton of these gaps, right? You have another one on Amazon up into 208.65. If you guys go to the weekly chart, you're able to see how this is looking like it's going to break back above this weekly level if it can claim the previous week's high. And then obviously above the previous week's high. I think that's also a really nice trade here to then go target all the way back up into like 208, right? We have some more targets up into a back test around here at 215. If you guys take a look at like your EMAs on the daily chart and a lot of the equity market, you could see how they're very, very coiled up against price right now, and they're trying to either claim them or reject them. So yeah, I mean, there's going to be so many different areas where we can obviously look at sentiment and be like, okay, yeah, I mean, a lot of people are betting on this whole entire market moving its way down. And we have a series of three lows down here, right? So if we have a series of three lows on the NASDAQ, and let's just say we get a really, really, really disgusting gap down that gaps us down beneath all of the lows into around the 460 psych, and then that's kind of like our panic day that results in a change of hands that really pops volatility, which is what we've been looking for. Anytime volatility pops is an opportunity for us to obviously look at the opposite direction of that. We had that action happening here on December 18th, right? We go over to December 18th and we can see how all the way up here we had absolutely disgusting action going on, and then obviously the snapback trade the following 2 days later was absolutely fantastic, right? I feel like we need some of that in the market if we want to put a lot of size on a long side trade. I'm still pretty bullish. I really am, just because there's really no attractive price to enter in terms of like the NASDAQ. I would say your short side trades are going to have to remain over towards like NVIDIA, sticking with the distributive chart that has very major volume footprints and with no deviation away from bear gaps where price would obviously pull back towards. That's why I've been looking at like the Google and the Microsoft chart as more of like a reversion type of setup, just because we're not deviating very far away from, or we are deviating very far away from very large, heavy volume gaps that price never pulled back into, right? We go over to something like NVIDIA, and that's just not the case right now. So, with that being said, all gaps are closed. There's still bull gaps to the downside, and we basically just crept our way all the way back up into discount from, swing low, swing high, looking at the weekly or the hourly schematic here going on. Go into the extended hours, and you could see how we were basically pulling into the discounted area at 124. I talked about my scan, how at 124 was my area of focus in terms of looking for a fade opportunity, and that's played out very, very well here throughout most of this week, right? We're down. We sold off about $10, $9 from that 124 spot. 123 technically from the open, but still a really vulnerable long side trade, or short side trade. And basically what I'm looking at for this one now would be, where is the next day of price going to move towards, just because we're trading within the confines of these 2 trading days. You have your 21 EMA being on this current day high, and then you have the close ever so slightly above the 9. I don't really care too much about that, but what I'd be looking for is any sort of overshoot of those EMAs in a reclaim, followed by another distributive high that fills the 124 gap, and then obviously completely fails that, gets beneath the current weekly highs from the Monday high. And then it pulls all the way back lower into 113. That could be a fantastic swing opportunity for April 17th expiration. Um, I think it's going to happen again. I've been successful with NVIDIA the entire time on the way down. I don't see why I would not be able to catch this one more time with basically how the character is in price moving forward. This is a really disgusting looking chart in my opinion, and I just don't really see how this one moves its way higher, especially with flows expiring into the end of March OPEX. March OPEX is Friday of this week, so after that we have a 2 to 3 week window where market weakness can remain very, very like clear, and we can obviously get a lot of, if we get that pop back to the upside, that makes the short side trade a lot better in terms of if we got the pop back to the upside in indexes, which is what I'm looking for. That's why I'm leaning a little bit more bearish down here. I'm going to pivot, or bullish down here. I'm going to pivot bearish on an LPSY after we fill some of these gaps that we need to revert to. And then obviously after we fill those gaps, maybe we would find this area of the chart right around here from the progress range from the election gap to be some sort of like area that sellers defend one more time for an LPSY after the March OPEX, about, like I said, a 2 to 3 week window. That's why I'm leaning a little bit more bullish leading into the end of the OPEX range. So maybe revert back to the upside. We find an LPSY that lines up really nicely with the short side trades that are obviously very, very distributive looking, like NVIDIA, that have no strong sweep of any particular level. There's nothing going for this chart that leads me to believe that there's a change of hands happening. So with that being said, I'm going to be heavily watching NVIDIA still. Plan really never has changed. We go over into some of like the commodity areas of the market, right? We have precious metals, SLV being one of these that is trying to catch up to gold right now. And as of right now, everything's looking pretty strong. The market remains in a relatively clear risk-off rotation. We go over into XLE. This is a very strong sector, right? And then you take a look at a lot of the equity within that sector, and you could say to yourself, there's going to be a lot of very, very big time breakouts happening in some of these areas where people aren't really watching very closely. This is why I've been talking about CVX and ZOM. Zom just broke out of a disgustingly large weekly base right around here. We could also see the same over with like, I believe Valero's now on the move as well. And this chart is looking absolutely fantastic. Not really the greatest yet on super like higher, much higher time frames, but a lot of these charts really don't look bad and they look prime for upside. While as a lot of tech, it has that sketchy look still. So there's going to be opportunities in tech here for the long side. Um, like I said, the ones I talked about, Tesla, I think that this one's going to shake out a little bit more early participants, and then it's going to obviously undercut the areas of stops that are already being placed on the name. It might overshoot some of these gaps, right? We have a gap all the way up into here at 262, right? It could technically overshoot those, and this could become still yet again a very vulnerable long side trade, and then you could kind of get like double wick weekly lows that are obviously playing out in respect to this weekly low, right? But there's still technically an ever so slightly unfilled gap here from the previous earnings report, 2 earnings reports ago. So uh, there's no convincing me that this is really truly ready for the upside just yet, right? Um, like I said, there could be upside reversion targets in mind, but as far as like a very much like a very further out type of swing trade, I don't really see it happening just yet. So SLV, yeah, it is a really clean chart. Well, I mean, I'm long other things. You guys gotta remember, like, I'm long Zom right now. And like, is there a reason to stop out on this chart? No, there's not. So it's just going to be the same thing for me over and over and over again until tech obviously shows that, right? We go over to like a lot of like the growth names. I mean, these are kind of dead. These are really dead. There's really not a true edge in a lot of these growth charts that, like I said, they really have not been showing anything just yet. Obviously, we could find like LPSYs on a lot of the or LPSs on a lot of these like bottom end, bottom feeder, very strong accumulative bases that are still trying to spot their higher lows. And those are going to be very good trades, right? But like XYZ, it completely bled into lower extremes. We go to over to PayPal. I could do a very quick scan that shows you as to what's going on in terms of like, the growth sector and whatnot. DKNG, a disgusting false breakout on a newly emerging growth leader that couldn't even base this previous high, couldn't base this resistance, couldn't fill the gap and base the gap. These are not these are like you're speculating hard as hell on shit that just does not make sense to trade if you're trying to trade this shit. It just does not make sense. It truly does not make sense. It's a waste of money. It's a waste of mental energy. It's a waste of everything. And then people just completely disregard charts that look like this. Like just completely disregard them. Go take a look at the XLE sector. I mean, this is a fantastic looking chart here with some of the biggest weekly volume that we've ever seen relative to the rest of the range ever since all the way back here. I mean, you tell me, guys. You tell me. Like, I'm just going to tell you what I see. And you guys don't have to follow it. It seems like a lot of you guys don't really like to follow these certain things, and you try to look at like the high short interest growth names that just never break out. They never get direction, and then it doesn't work out for you, and then you're just done. Like that to me, that's just a very poor effort in terms of like looking at a trade opportunity and really putting in the time to understand like where your risk tolerance is, how the vol is on those contracts. If you're trying to trade growth that isn't in an A plus setup, you're going to get cooked. It's just the contract, the vol, everything priced into those contracts. It's just terrible. All of it's terrible. It's shitty everywhere. Every aspect of growth right now is shitty to trade. So I don't know why people are trading it. I don't ask. I have no idea. But there is a lot of opportunity in the energy sector. There's a lot of opportunity in like the clean energy sector. Like go take a look at the chart like AR. I mean, this is a fantastic looking chart here on the weekly. You take a look at like the reversal pattern kind of setting up here and the volume profile in smaller time frames like your daily chart. I mean, this is a fantastic looking chart, right? Um, And you're getting that in a lot of different areas of the market that people really aren't paying attention to. Um, so with that being said, I mean, there's really not much more to talk about in terms of like opportunities in the market. I kind of want to go over and review everything that we've seen throughout most of this sell off period, because I feel like a lot of people were really trapped off sides here on a lot of this sell off. Um, One thing that I want to talk about is that FOMC is always going to be a predetermined event. They always layer orders from the bottom end of the chart. They always make things into uh, they always make the chart really like difficult to approach in terms of front running your positioning into an event, if that makes sense. Does that make sense to you guys? Meaning like they try to stop you out, they try to like create multiple price waves in terms of like popping it up, micro distribution, popping it lower, micro accumulation, and then they're absorbing the highs while they're accumulating the lows. And then as you absorb incrementally off of the highs, you create a path of least resistance. Does that make sense to you guys at all or no? Should I cover that a little bit more in depth or not? Okay. Okay, so what I mean by that, like, okay, I don't want to sound like cocky or arrogant because like I didn't make a ton of money on it, but like I pretty much gave you the exact way that like the indexes would play out this week. Um, and it was through these gaps, right? Gaps are always imbalances in charts. There's always going to be a dark pool order sitting off of a gap at one particular area, right? They typically bid the gap in terms of bids into the bull gaps that remain unfilled, and then they sell off the highs in terms of like bear gaps where seller orders are there within that dark pool, right? So whenever you're looking at like unfilled gaps, for example, and we have FOMC, what they typically do is they absorbed supply within this gap. They tested into that supply, and then there was a very weak looking closure that closed beneath this daily high, which is the start of the gap. It's a very bearish signal, right? For the time being, very short term here. And then they left behind a bull gap to the downside. This is Monday, so right now they're absorbing supply to the upside. It doesn't mean they absorbed all supply because that's one test. Anytime I talk about a path of least resistance model, it's several tests, and then it's very high tightening action happening on like the hourly or the daily chart, depending on which time frame you're looking at. For then obviously the expansion through, right? That's why I always said, you know, it's okay to take base hits on these charts where you're shorting the upper gaps, you're longing the bull gaps, you're longing the higher lows, you're longing the discounted entries, is because they sold off inventory Monday, right? And then they faked everyone out and started to shake everyone out that was trying to bottom tick the whole entire S&P throughout most of these trading days, right? So this is a stop rate underneath the Friday low. That Friday low is obviously very bullish, right? This is a time where, you know, this is a big time reversal and everybody got long and they pull it back down. There's a major event coming within the market. They pull everything down, they put in a higher low, and then obviously from that higher low, you already absorbed a lot of the seller orders from above. And now you're basing everything on a gap sweep leading into the event, right? So this is all simply just coming down to just a simple weekly swing high, weekly swing low. It's a discounted 618 base that sweeps into the bull gap. And then obviously climbs its way higher off of higher lows subsequently into that event, right? This is really nice reversion here back to the upside. It pulled back down into FOMC. From FOMC, what we got previous day low, current swing high. We got basically the discounted entry off of 476.41 right into FOMC. That was another higher low to then revert us all the way back up to bear gaps once again, right? So right now, everything's just trying to reevaluate itself on whether or not we want to absorb these gaps, right? So we have a very large gap sitting right around here. What do they want to do with that gap? Do they want to absorb it and then break and base that gap and then obviously send it higher up to collect more supply in remaining unfilled gaps to the upside, like we have one right around here at 492-ish? Or do they want to redistribute off of this, lose that gap, not claim it as progression, and then it pulls all the way back down lower to the bear gap, or the bull gap left behind, right? So the event was kind of a dud right now. Yeah. The event was kind of a complete and total waste of time and a complete and total. At what point would you consider that gap absorbed, the gray one? Just a break and base. It's a break and base of the gap. That's why we use those gaps as like progress levels, meaning like, okay, say into tomorrow it gaps up and then it fades down, and then you see a buyer really committing to that gap, it's likely then going to draw all the way back up to the further gap to the upside. Break and base. That's how I say it's absorbed. They've traded throughout all of the gap. They break and base the gap, and then there's a lack of supply to push it lower. Therefore, you have to move back to the upside because there's a lack of supply at this current area of the chart, and there's a high within the gap, and that high is a lower high that is shallow within another bear gap. Because Josh was saying that the NWOG was absorbed as well. I mean, he doesn't know if the NWOG's absorbed. I mean, that's not a diss. I don't know either. I'm just saying he doesn't. There's no way of knowing that. I mean, we could fade back down lower tomorrow for like all I know, and I think we have a very high chance of doing so. I think right now what's going to happen, guys, is we're going to get some sort of like 3 higher high distribution schematic playing out within a lot of these gaps, and then you're going to get very heavy liquidation from the top end of the chart, and it's all going to align with like flows returning a little bit more into April. And then that's whenever the real accumulation starts, because to be quite honest with you guys, there's no accumulative low that tells me that any of this area of the chart, especially with a gap being remained unfilled, as well as within the S&P, there's nothing around here that's convincing enough to tell me that this is indefinitely the bottom. I'm more of a two-sided trader right now, the two-sided type of bias moving forward here. And it's just kind of how it's going to have to be here for a little bit of time. That's just how market conditions are behaving, right? It's a short the pop, long the dip type of market, and you want to really avoid long shorting. You really want to avoid longing dips aggressively if we were to retrace higher, right? If we get deviation a little bit further away from the local low being created here at the 550s, you want to be very careful with longing sell-offs that this could revert all the way back towards the low and create a new low, right? So, you know, I don't know necessarily what's going to happen, but like I said, we go over into some of these other sectors. XLE, we'll break down this one here real quick. It was a previous support. It tried to establish a higher low from the OPEX rotation sweep, right? So this is whenever everything was being rotated into in terms of like risk off type of environment. This was a sweep of the previous low at $83, and it swept it to a T right into December 20th with, I mean, look at that volume leading right into the low. This is why I say, you know, everyone talks about VPA in terms of, oh, just look at the daily candle spread in the amount of volume, and you can kind of conclude as to what's going on within that tape. No, context matters. Volume really increased into this low, right? And then obviously we got into the holidays. That is what's showing you the really low volume. But volume really increased into this low, and then we couldn't even break the low the next following 2 days with pretty decent volume and really tiny candles right into December OPEX. It's going to revert back to the upside. So that's what it did, and then it tried to put in a discounted higher low right here. This is whenever they started to transition a little bit more to the XL P rotation, the consumers, right? So this never really truly had the breakout that we were looking for up towards the highs, and it actually started to fail the bear progress or the bull progress claimed from sellers, and then obviously lower highs beneath that gap, right? So what it did was it shook out everyone beneath the local low and then reclaimed it, put in like an hourly high type flag, and now we're ripping really aggressively for basically 4 trading sessions back to back to back off of this range, right? And then we go take a look at like CVX, we take a look at a lot of these areas of like the equity in the sector. I mean, this is a monthly, has a monthly breakout potential that is through the roof, right? We go over to into USO, which is the oil fund, and you guys take a look at the daily. I mean, this isn't a big time support. You guys go take a look at the oil futures, huge support down here as well that we're sitting within. Oxy, you go take a look at Oxy, and a lot of these charts here on the weekly perspective, they look like they're stacking a lot of volume in a sell climax with a 3 lower low accumulation kind of taking place. So all we need is a really nice big spark candle to really tell us these things are going to be the next rotation. Obviously the safe haven rotation kind of happening right now. It's not necessarily safe haven, but it was undervalued in other areas of the market. It was China. This was all just a really nice mean reversion trade here back to the upside. Um, really fantastic trend here back to the upside. Really big time volume stepping in towards the highs on a neutral candle spread. So this is the next thing that I really want to cover. I want to see what the displacement looks like on these double inside bars. So this was technically a breakout candle, and right now it's technically a big fat failure. I'm not going to say it's continuously going to fail because it is a double inside bar setup. So what I find interesting about this one, guys, is we have a very large gap here that's been untested to the upside, and this thing has been on a very parabolic trend. Sentiment's getting a little bit lopsided here within China, so I really am interested in just seeing, not necessarily going to front run and just immediately assume it's going to be some sort of UTAD over the highs and it's going to be a big time breakout failure and then it's going to completely get shit on. But that's the bear gap we're looking at. If you guys go all the way back over here, right? We never had any true, strong, big time retest. What we more or less had was huge breakaway gaps here to the upside. No big retest of these previous resistances turning into a support, right? You guys can see how these are all previous resistances turning into a support. We never had any big retest. What we more or less got was just gap after gap after gap up through those areas, right? So this is definitely some sort of squeeze going on BABA as well. There's not a lot of orders. There's a lot of orders that are remaining unfilled throughout a lot of these areas of the chart, right? And we have big time gaps that have a lot of volume behind them on previous distributive ranges from these charts, right? If you guys are taking a look at what this really looks like from the bigger perspective of things, I mean, we could definitely find a little bit of rest on names like Baba. I mean, this is a 4-week consolidation period, a 4-week inside bar period that is now failing above all of the highs of the resistance from that 3 inside bars on the weekly chart here. So, if it wants to continue its way a little bit higher, kind of capture more of those breakout buyers as exit liquidity, and then they continuously distribute this into the gap, and then it eventually finds a footprint candle and a breakdown, this thing's going to revert all the way back down into a lot of these gaps to the downside and eventually get a retest. So I don't know if that's necessarily going to happen directly right away, but as you guys can see, I mean, this is going to be a big time short focus of mine here. You guys go over to PLTR, you can see how within PLTR, very liquid moves to the downside from the upper ends of the chart. You guys go over to Hood, a similar basket here with the risk on market, the growth sector. What Hood had was also kind of like a parabolic short where this thing is completely extended away from, its mean. If you guys are taking a look at like the 50-day or the 200-day, and this is just completely bursted off of the no true retest of the 50-day, which obviously calls for mean reversion when you get big time gap ups like this. That big time gap up, with that being said, it was into the IPO gap that was remaining unfilled over here from 66.50 up into 70.39. You go back over and you could see how the rollover was actually very aggressive and it didn't need a lot of volume because there was a lot of volume within that earnings candle that was actually a very large seller. If you guys go into the hourly chart You guys take a look at like that very large wick coming in off of a sweep of that IPO gap at 66.50, with a very large gap remaining to the downside. And like I said, reverting to the mean can happen in an instant here, given the fact of overextensions, very, very big notable gaps left behind. These are just not really healthy trends that are coming from, 1,000%, 500% returns ever since the summer lows of 2024. They're going to revert back to the downside just as quick as what they did to the upside. And they're very fantastic short side vehicles. So, I mean, there's still going to be opportunity in a lot of these names that have those parabolic tops. There truly is. You guys, it's funny because everyone calls me crazy whenever I call these things before they happen. I'm not trying to sound like arrogant or cocky here. I'm just trying to teach you guys a true lesson about like market. I've been in this game for a while, so I kind of know, how the behavior is in terms of like everyone was calling me retarded for like so many people were calling me dumb for TSM. So many people were calling me dumb for Nvidia whenever I said this thing will distribute throughout January, February, into March, into April, actually. Back all the way in September of last year. People call me dumb for AMD whenever that thing had its rollover from the upper end of the chart, right? And you guys can see how this thing rolled over from OPEX, March OPEX of last year. Well, technically February OPEX, but this thing is down, cut in half. So you guys can see the potential behind a lot of these names that, yes, they did rally, from down here at $95. Oh, big bad, $81 run all the way up into here, 182% gain. Woohoo hoo hoo. Yeah, fantastic. Great. So good. I'm so rich. Yeah, it's going to keep going. It's the same shit that's going to happen with a lot of these names. It's the same shit over and over and over again. I mean, there's going to be names that are just, the next big thing. Maybe that is the case, but there's still names that have went on absolutely insane rallies to the upside that just aren't going to be able to withstand those. Some of them will be heading through the reports. Some of them are not going to really show off that true opportunity just because it's going to wait until the report's going to consolidate. It's not going to find any true volatility. It's not going to find any true capitulation or any speed in the tape here, and it's just going to eventually get shit on through the next report. It could definitely be the case as well. So these names, they look horrible. They look shit, poop, ass. So we go over into consumers now. Let's take a look at the consumers and see how the dips are kind of being reacted to. Like, how are they reacting to the dips? How are they reacting to the previous market leaders? They're not reacting at all. They're not reacting in one singular bit. So, I don't know, man. I mean, hey, you guys can stick with the long side thesis. I stuck with the long side thesis since all the way down here. There's a like people don't understand this. There is a major difference between being long down here within like, your 3 lower low accumulation here on the hourly chart. If you guys want to take a look, you can see it right on the daily chart, just as I was talking about before. 3 lower low, 1. Oh, they couldn't get it lower again. Oh, they couldn't get it lower again. Oh, look at the volume. Not really anything crazy. Oh, look at the upside. Reversion back to the upside. Oh, it didn't revert to the upside. Oh, look at the higher low. Oh, it swept the gap. Oh, it's in discount. Oh, it's in the 618. Oh my God, I'm going to short into the 618. What the hell, dude? Oh, I'm going to shorten to the 618. Oh, I got squeezed. What the fuck, bro? The market's a scam. No, man. You long these areas from the 3 lower low that are respecting structure subsequently. And then you reshort the highs, right? Because with overall market sentiment, with overall market health in the previous leaders and whatnot, there's nothing. There's nothing to see there that's like, wow, this is so convincing here, bro. This is so easy back to the upside. No. Not happening. So let's go take a look at the sectors. Well, Obviously, some of these are kind of rolling over from like the previous like uh, I really want to see how the sectors get bought up, though. That's the thing. I want to see how these get bought up. I want to see what happens in terms of behavior with like Tesla, and then obviously how that behavior happens within like Google on these weekly candles, how that happens within Nvidia to the downside. To the downside is what I'm talking about here with Nvidia, as well as Apple. Apple's going to be a very, very big driving market sentiment here, for me at least, on what's going to happen at these support levels. Obviously, this weekly candle looks like ass. None of this looks good. So, like, what do you really want me to say here? Do you want me to cope with you and be like, oh, yeah, Jimmy John, you should sell your trailer park and throw it in some calls because, we're in an uptrend. No, that doesn't work like that. Like, it just simply does not work like that. Um, and the market just has never shown a change of hands in any area of the equity market as well as the indexes, right? We go over to the S&P, we go to the QQQ, we go to the this. I'm not saying the sell-off is horribly uncontrolled. We have to kind of use very easy logic here in terms of like really being patient with the upside, reshorts, and then obviously the downside being playing passive to both ends. Don't trade the internal structure, trade the external structure. Trade what happens over above that external structure, meaning you have a current swing high and you have a current swing low on like your hourly. Trade the upper ends, trade the lower ends, trade a little bit of internal structure in terms of imbalances. Bullish bias, but no, yeah, I mean, if you have a bullish bias, trade the discounted areas. Don't be the guy that's buying into the highs all the way up here, because that's just retarded, man. And then you go over into some of these, dude. You go over into some of these other areas of the market, right? And a lot of them, they look good. This looks good. It doesn't look great. It looks better than a lot of the other areas. And it's a semi. And AMD is starting to look a lot better than some of the other areas, right? It's a semi. I don't know who's quacking, but it's fucking making me laugh. It's making me laugh my ass off, man. Um, we see uh, we see a lot of the um, we see a lot of the equity market in China trying to digest these previous like the crossbacks happening on like the weekly and the daily. And I was a buyer of Baidu down here into like 82, 83. I got a really nice win. There's still targets to keep in mind of for the upside. But the weekly candle closures have to show something here, leading into off of this retest essentially. These 2 days, if you guys are doing the math here, 11 million volume and 8 million volume, that's 19 million volume traded. This is 14 million volume traded. So technically, the retest right now is exceeding the volume of the breakout candle. And now we're basically looking at if they want to hold the buyer progress now claimed off of this earnings gap down, which is right around 97. Right around here at 97.50-ish. So do they want to protect the candle essentially on this high volume breakthrough? These 2 days are adding up in total value of this day plus more. There's more volume in these two sell-off periods than there is within this actual breakthrough candle. So now it's essentially just up to that third day of action happening subsequently to the breakout candle, right? Is it going to be a pop? Are they going to drop it and then reverse it? If they drop it and reverse it, that's a very bullish long side trade idea. There's a lot to be said with the China sector, right? Still fantastic looking charts, even over into some of these other areas where like they're not going to be fully affected by the distributive tech. Obviously, we have like CVS very, very, very properly digesting around that $68 range. If you guys go over into some of these other areas in terms of like LLY, for example, I mean, this is in an area where if you guys go take a look at the monthly or the weekly, I'm sorry, what's going to happen off of discount? Are we going to finally start flipping structure from the top that looked like it was going to roll us over into a sweep of like this previous low? And then it started to find a really true strong pop that had a lot of intention behind it. It's pulling back now into discount, right? So are we going to find momentum off of that discounted area? And then you go over into some of these other names like J&J, right? This is kind of formulating like some sort of like either a reaccumulation or a newly found distribution from these previous highs, or is it going to properly digest these highs, and are we eventually going to see a path of least resistance, right? There's so many opportunities in this market, despite of, you know, the iffy looking tech area of the market. DBC monthly. Yeah, like there's so many tickers. There's so many tickers you can look at on like the much bigger time frames here, guys, and just take a look at them that relate to commodities, names that are more of a commons trade than they are like an options trade. Just because of, you know, just because it has a bad options chain doesn't mean you have to really trade it. But a lot of these other areas of the market, guys, I mean, this is a fantastic looking chart. This is just a great looking chart, right? Um, you have other areas of the market that, you know, where they could start rotating in terms of a risk off type of environment, right? You have CCJ coming off of a gap fill, and this is a fantastic looking trade as well. It's not the best looking structure here, I must have to say, on the daily chart, so it's not like any sort of A plus setup. But you know, CCJ is really not a bad one to keep in mind here. While the market is a little bit more confused, they love their safe haven risk off rotations being like names with like heavier amounts of cash on hand. That's why they initially rotated consumers. That's why that happens, guys. You guys go over to like I said, Oxy. It's a fantastic looking chart on Oxy with a sell climax. The new lower lows cannot displace any bit lower, and there's a lot of volume here on the weekly chart, with the weekly profile being relatively bullish volume. I mean, you have volume here, buyer volume. You have volume here, buyer volume. You have volume here, buyer volume. Right. Um, so I don't know, man. I really do like energy. I really do like energy. I like energy. I like the MU report coming up here. I want to see what happens with the MU report. This is a path of least resistance here for the upside, just as we talk about with the consecutive after consecutive test of a resistance, to the point where you have so much coiling action going on with an external high, a bunch of lower highs subsequently to that, but they're all testing within the upper extremes of the range. And then obviously, you know, as you pop your way higher, what's going to happen? Are we going to mark our ways up and then formulate some sort of high tight flag, and then it shows a path of least resistance, and then it eventually breaks through and then goes and it tests all the way up into here? That is a sign of a major lack of supply down here from the bottom end of the chart. They've already absorbed everything throughout the only bearish area of the chart, really, which is right around here, and then that also extends into the sympathy gap down with the NVIDIA right here, and they've absorbed it all. They've traded back through it. They've sold it off again into it. They've built liquidity beneath it. They've swept that liquidity, then traded back through it once again. So all of that is absorbed. Right now, it all comes down to earnings. So what's going to happen on the earnings report? And I'm bullish either way. I'm bullish on a markdown. I preferably would like to see a markdown and then some sort of like Shopify reaccumulation looking candle where they mark it down and they gap it down disgustingly. And then that gap down is a candle that looks like this, or a candle that looks like this over here. Where were Shopify's? Right here, where they're establishing a path of least resistance off of like midway through the gap. And then obviously as you climb through that gap, it pulls back, back tests it, and then uses that as a path of least resistance after it absorbs the entirety of the range. gets a lower volume sell, and then higher lows afterwards. I mean, you guys would have thought there was no trade opportunity on shop all the way down here. And then once you see this the rip higher in the peg, and you see the low volume pullbacks into the previous resistances, and then you see those hold with the gap fill being completely and totally done and lower volume coming off of a sell into a higher low off that gap, then you could start saying to yourself, okay, yeah, there's a ton of opportunity in terms of like these charts marking down from their accumulative bases and then finally putting in their spring, and then their spring is then what eventually creates a path of least resistance all the way back to the upside, and then that's a trade where you can just roll profits once the range gets high and tight off of the resistance, and then it finally displaces and heads for the upper gaps, and then it's just a double dip trade. Yeah, CRWD. I mean, everyone thought this thing was going bankrupt down here. Well, I traded every single high or low on this one all the way back up into the upside gaps to target to the upside. All we need is some mother candles, exactly. All we need is some candles that show pretty heavy volume, pretty heavy volatility. Once we can find those candles, we can start establishing risk off of like if we were to get some digestion afterwards. Once we find that, everything is going to be set in stone, and it's going to be very easy on June expiration. Dude, that I don't even know how you're doing that. I think I can do that. I have to check my soundboard. So where the fuck are the massive bullish engulfings? uh, the bullish engulfings, I don't think they're gonna come. I think we're going to get no bullish engulfings. I think we're going to get uh I think we're going to get a back test of some of these areas on the Nasdaq, and I think we're going to get eventually the LPSY, the reshort back down. It's going to take out the lows, buyer stop rate into around where the Fed's going to pivot into summer. The Fed's going to pivot into summer, guys. So keep that in mind in terms of the equity market kind of aligning with the Fed pivoting into the summer. Oh man, these beers are going down the hatchet nice and clean. Do you guys want me to tell you guys all the possibilities? Down the hatch, my bad. That's how you know they're going down the hatch nice whenever I say hatchet. Anyway, um, are you guys understanding everything going on right now? I mean, like, I'm not going to sit there and act like I know exactly what's going to happen with the market. I think Nvidia is going to be a reshort. I think energy looks good. I think China needs to show off some clean digestion. I think insight on NVIDIA chart. So with the NVIDIA chart, it's just I want to see exactly what happens on the current week highs, and I want to see what happens into discount. Swing high, swing low. Discounts up at 124, and we try to retest it in the Monday pre-market highs, but I don't really count pre-market as like a true retest. It's also where there's an entirety of a gap fill up into 125. I want to see what happens off 125 because that's also the breakout level, the breakdown level from the current week close of the earnings report. This is the Thursday earnings report. This is technically the breakdown level, and there's also a gap fill right there. So I want to see if they maybe like push it ever so slightly back up into that, and then they send it up for like a distributive looking high, and then they hammer it horribly bad. Right now I have April 17th expiration NVIDIA puts that I'm up like 20% on. But I'll probably stop out on those if the trade doesn't work immediately into tomorrow. I'll stop out for like a tiny little loss or like a tiny little win, whatever it allows me to do. And then if it gaps up, I'll see what happens off the open. And then I might even add I just really think the short's gonna work here still. And I really have not been wrong with NVIDIA at all. I mean, I've shorted every single area of Nvidia other than like one shaky little time right around here, which technically was green into the back test of the 130 floor, but it just never really worked out on a true directional read. And then I shorted the titties out of it all the way up here. And then I got immensely paid on into 120, like 120, like 7. And then I covered that into the report, and then I shorted the report again. And then I think structure's just going to respect the fact of like all of everything tying in with this earnings candle. Like I said, guys, there's not anything that's truly convincing that sellers don't hammer this thing one more time down into 108.76. So could that happen tomorrow? Could
Hey
that happen
Joe,
in the OPEX? Yeah, totally. What's up?
am I posting my comments in the wrong spot? Are you seeing mine?
No, I'm looking at general chat. Yeah, all I do
Oh,
is look
okay,
at.
got it.
Oh, geez, Trips is
Okay,
typing in there, and okay, you both are. I could look at your stuff now. Um,
no, it's okay. You
RDDT
don't
got
need
to.
to. I was
Okay, all right. Uh,
no need, no need. Thanks. I'll go to general chat. Appreciate.
yeah, no problem. Moderna. I mean, it got to hold this progression gap here. It starts down here at 33.30. It ends all the way up towards 42. The accumulation looks good. But context to accumulation always matters, as I teach. I mean, if you guys want any sort of, I mean, this is like the IPO range highs before the breakout, that as to where it's like kind of retesting right now, and it has that accumulative look to it. I'd rather trade this thing on some clear momentum and trade it into clear momentum rather than just trying to time like a higher low, just because it's a illiquid volume profile. So there's nothing ever really truly guaranteed in terms of like trying to front run a rotation happening over into like this. That's kind of like a sympathy over into like Johnson and Johnson. Because like Johnson and Johnson's rallying, and like this thing's like completely dead at lows. And yes, they're stacking volume at the lows, but like they're stacking volume in a name that's like really not like that liquid. So the volume's not anything crazy significant, as well as like the fact that like a lot of this volume is technically gap downs. And those gap downs are failing to displace lower, and they're trying to buy up and soak those lows. But what's the next big like volume candle essentially is kind of what I'm looking at. So there's a reason why this one isn't following Moderna, is what I'll say. Or Johnson and Johnson, I'm sorry. Yeah, no problem. So yeah, Nvidia. I'm probably gonna like my P&L in terms of if I go on a big run. I almost guarantee you guys a big P&L run that I have into April is going to be either Google, Microsoft, or Nvidia, and really ultimate or energy. Those four areas of the market. Well, technically two areas of the market. Tech, one short side vehicle for tech, two long side vehicles for tech, or energy. I'm going to be putting all my focus in this entire sector, and I might just start accumulating the shit out of Oxy or Zom pullbacks, whatever like gives me the best opportunity first, or precious metals or commodities. It's going to be one of those like four areas of the market. And then there's going to be like some day trades in between that I take. Like I had a really nice win for 40% here on QQQ today, like right around here. The pullback off of this gap right here on like a slight little retest on the overshoot of 580 leading into FOMC. I figured, they got to pull this thing back a little bit more because I was bullish on FOMC. That's the thing, guys. I'm bullish on FOMC because of the higher time frame analysis, to the point where like on smaller time frame analysis, whenever this thing's breaking away into very big, large bear gaps that are very liquid, they're going to sell it off and put in like a higher low at some point into an event that I'm bullish on. because they want to pull things lower for more optimal fills. They pull it lower, into the opening print, and then that's right into your FOMC, and then it reverts back into the higher time frame targets that I have in mind, all the way back up into the fill at 482.73. Right? It's very simple things, and all I'm really looking at is higher time frame reads on very bullish leg to the upside. Only swept the gap right here, did not fill the entirety of the gap, absorb liquidity off the bottom of the gap. So now I can see this as being at least where we're going to move towards. We're going to at least move towards here, right? And then we actually sell off minus 1.7% the day before FOMC, but all it is an hourly higher low, right? Hourly higher low, sweep into the gap, hold the golden pocket, and then obviously a very, very large change in character happening into the afternoon over here, and then it's structure within structure. I mean, this is a reaccumulation happening in this little box, and then a higher low in FOMC, and then the entirety of the gap fill all the way up here, right? And then this is all just bidding the market down in preparation for that event to push it back higher. Sorry, I just accidentally hit my mute button. But yeah, that's about all there really is here. I don't really see any super duper clean looking chart. It's more and less just like I said, higher time frame perspective being like, upside LPSY into like around the election gap range. So like 499 into the 490s essentially is my long side target here. And those flows come off the table after Friday. So after Friday, if we could pop up, the timing becomes even better if we pop up into flows expiring into the 490s, Vanna Charmer off the table, and then that would be the reshort opportunity, and then we would re-long this thing once again into whenever the market wants to price in the Fed stimulating. So that's it. Energy, NVIDIA, Google reversion, Microsoft reversion. There's really not much more to talk about. Precious metals, commodities. I'm already long commodities in my big port. Like I have some copper, I have some silver, I have some gold, I have some energy future. Like I have oil fund. I have a lot of like protection. I have MO. Like I'm still in some consumers that remain constructive, remain relatively propped amidst like the consumer sell-off, right? We have like PM Philip Morris. I mean, this is still a decent looking chart. MO is just a little bit better in my opinion, just because of like the levels that we have here to work with. Like very, very large levels actually on these coming out of big bases on the weekly. So yeah. Alrighty, I'm gonna get going. It sucks because FOMC didn't bring us any sort of very large move in new like emerging leaders. So it really, really, really sucks because like I can't tell you too much just yet. So we're probably gonna host another call here, just because the market hasn't really shown off anything that's like too crazy. Um, there just hasn't really been anything. I mean, a lot of the sectors kind of rallied their way back to the upside. I will have to say, guys, I mean, BA, I was just talking about this, but like BA's all it's really doing is respecting the fact of like finding a higher low off of where I was previously all over this one at. It's like right here, and now it's finding really strong momentum here back to the upside. So this could be a trade of mine as well, if it sets up really nicely. And this one can go all the way back up towards reverting to the gaps into the 200s. There's a lot of areas on this chart where you can start thinking about targeting. Resistance will open at 195 that we've actually failed to retest on the previous swing high. And like I said, we're getting really strong momentum in some of these. So, well, a lot of the other sectors remain relatively stagnant. So is this tech move truly like going to continue its way to the upside, or is it just reversion? That's what I'm kind of asking myself right now. So, yeah. Bros, I think this chart looks pretty damn good. It's nothing like Hood, in my opinion. It's kind of like Hood in PLTR, but it's not in the same sector necessarily that I really like as of right now. This is more of like a discretionary sector, so this is going to be another one on watch, just because I really do like discretionary, and I'm going to see how these charts behave. Nike, I'm really interested in the report, and like I said, guys, there's reports coming out that like could bring opportunities off of earnings candles, off of flushes. We just have to wait and see for what the reaction is. So. Um, Shortening of the thrust, trying to find like an LPS or like a sign up like a spring test type of candle after the spring. So I guess we'll see. But yeah, I'll do a weekend scan just because, like I said, I want to get through OPEX and just see everything going on after the OPEX, March OPEX, and then just kind of see like how the reshort opportunities are going to look after OPEX. Because I will go heavy on those. I will go heavy on the short side still. Keep that in mind. I still have a solid amount of conviction on that side. So we'll see. But I'm going to get going. I'll see you guys.